So despite the gold ETFs being around for over 20 years and gold being the dominant sound money for more than the last 6,000 years, the Bitcoin ETFs, after only 31 days of trading, are already on track to flip the gold ETFs in under 2 months' time. So to explain all of this, we've got around 6 charts we want to show you guys today, and we're going to start off with this one right here. So this in the big yellow bar, this is $93 billion of market cap. And this is representing the market cap of all of the gold ETFs. Now, again, the first gold ETF was launched 20 years ago in 2004. And we can see after 20 years, they've accumulated $93 billion worth of demand. We can see here, after only 31 days of trading, here in the orange box, this is the amount of supply that Bitcoin has sucked into it by the 9 new Bitcoin ETFs. So again, just look at the difference here. The Bitcoin ETFs are already 28.5% of the size of the gold ETFs. And when we look at some other charts here, we're going to see a very, very interesting trend. Okay, so let's start with this one. And this is kind of looking at the flows of Bitcoin and gold. So the flows of Bitcoin is represented by these blue bars at the top. So the big first blue bar, that is representing BlackRock. We can see that they've had around $2 billion of inflows. Fidelity's had over $1.2 billion of inflows, and ARK has had around $500 million of inflows. And we can see down here in the red bars, this is representing what has happened to gold. So we can see the SPDR gold shares has lost over $750 million worth of supply. Okay, and we can also see the iShares Gold Trust has also lost is at $284 million. Okay, so what's happening is money is flying out of these gold ETFs into the Bitcoin ETFs. So this is another really cool chart here, and it's showing the Bitcoin net new inflows versus the gold net outflows. So the gold outflows are 600 million and the Bitcoin inflows are 700 million. So you can pretty much see like Bitcoin is eating gold's lunch here. So this chart here is showing something very similar to what we looked at a moment ago. The 2 largest gold ETFs are bleeding capital to the Bitcoin ETFs. And this is absolutely massive because the Bitcoin ETFs are not slowing down with the amount of Bitcoin they are buying, okay? They continue buying more and more Bitcoin. So this is a really cool little chart here. So the green bars, it's showing you the net flows, the amount of Bitcoin bought, okay? So we can see in the last week, the Bitcoin ETFs continue buying a lot of Bitcoin. On day 29, 4,800 Bitcoin bought. Again, there's only, was it 10,000 Bitcoin mined a day, roughly, today? And we can see here, 900 Bitcoin mined a day. I clearly need a coffee. There's only 900 Bitcoin mined a day. So on day 29, the Bitcoin ETFs bought more than 5 days of supply, okay? Huge. They did the same thing the next day. They bought 4,500 Bitcoin on day 30 of the ETFs. So that is, again, 5 days worth of supply. This is absolutely huge. And we really need to kind of start asking ourselves the question, okay? Gold has a market cap of $12 trillion, okay? Gold is bought by central banks all around the world. Central banks right now are actually buying records amount of gold, okay? I believe central banks in the year 2022 and 2023 bought like more gold than they bought in the first decade of the 2000s millennia, okay? Absolutely massive demand for gold recently. But what happens when central banks start actually looking at this data here, okay? This is the data that I believe is going to be very, very important in actually making these central banks start questioning their decision to buy so much gold, okay? Bitcoin is already absolutely dominating gold in the realm of ETFs. And we can see that Bitcoin is already catching up to the amount of Bitcoin it's in its ETFs versus the amount of money that is in the gold ETFs. How long until people and central banks in particular start looking at this $12 trillion that's parked in gold as a store of value and says, hang on a minute, Bitcoin only has, around $1 trillion market cap. That's a pretty big differential, okay? That's a very big differential. That means Bitcoin is, roughly 8% of the size of gold's market cap, for some quick maths off the top of my head on a live stream. But if you look at the difference in these ETFs, Bitcoin is already 28% of the size of these gold ETFs. How long until some arbitrage traders start looking at that differential in the market cap between gold and Bitcoin? And how long until these arbitrageurs actually start buying Bitcoin instead? Okay, I don't know. I don't think it's going to take too long for a lot of people to start to figure this out. Again, we're living in the digital age. Information is traveling at the speed of light today. And I think charts like these that are spread on Twitter and information is spread so quickly, I think people are going to begin dumping gold a lot quicker than a lot of people expect it to take. I mean, but of course, you guys let us know in the comments down below whether you think Bitcoin is going to demonetize gold. And if it is, how long is this going to take? Is this going to be a multi-decade long process like many people, myself included, have probably thought in the past? I'm not so sure anymore. This ETF data is really fascinating. So we have Johnny in the chat. We have Austin in the chat. Hello from Ireland, Austin. We'd love to hear where you guys are actually tuning in from. And because right now it's around 6 o'clock where I am in Madeira. We're getting ready for the conference going down in Madeira this week. So we'd love to know where you guys are from. But this data that we're confronted with, it kind of suggests that maybe this flipping, so to say, could happen a lot quicker than most people think, okay? This is an enormous outflow from the gold ETFs in January alone. I think this is what I forgot to mention the first time we looked at this chart. This was only in January. Gold saw $1 billion of outflows in January alone. What's the gold market cap again? It is 93 billion. So let's assume gold continues to see the same amount of outflows every single month. Well, that means the gold ETF is going to lose around $12 billion of market cap this year. So it would take it from a $93 billion market cap entity stored in those gold ETFs, taking it all the way down to like $81 billion. That would be a pretty big haircut in 1 year. Okay, now again, we do know that the demand for these Bitcoin ETFs has remained steady in February, okay? It had a little bit of a quiet last couple of weeks in January, but the demand in the first and second and third weeks here of February has actually picked up a little bit. So I don't think it's a crazy assertion or assumption to assume that this outflow from gold ETFs could potentially continue. Okay, again, very interesting stats. We wanted to go live to show you guys those charts today. Johnny enjoyed that chart. We have someone tuning in from El Salvador. Very interesting live chat, lively live chat. Just wanted to quickly bring you guys that those stats there. Looks as if Bitcoin is being adopted as digital gold a lot quicker than most people think. But how long until Bitcoin is actually adopted as digital property? Okay, I think this is the really big kind of asset class that most Bitcoiners should be paying more attention to. I think the comparison to digital gold kind of, let's say, underrates Bitcoin's full potential. We actually think Michael Saylor has it right when he compares Bitcoin to property, okay? Bitcoin is like buying a plot of land in Manhattan a couple of hundred years ago, okay? That's where, that's kind of how early it is to the Bitcoin space today. So Michael Saylor's analogy of digital property is more interesting for a number of reasons. The first being that gold only has a market cap of $12 trillion. Real estate around the world has a market cap that's around $300 to $350 trillion. It's a little bit hard to measure because it does fluctuate a lot, and the Chinese property market is so large. I think from the top of memory, it's around $60 to $70 trillion, but it was like $80 trillion just a couple of years ago. So things do fluctuate a lot. So again, I think, framing Bitcoin as digital property is probably a more interesting comparison because of the TAM, okay? It raises Bitcoin's total addressable market cap by a lot, okay? We have $300 trillion sitting in property. So if you do want to learn a little bit more about why Michael Saylor calls, Bitcoin digital money and digital property, we're going to pop a link to a recent interview that we did with Michael a couple of months ago up on screen. Once the live stream's finished, you'll be able to find that interview somewhere around there. And with all that said, thank you to everyone tuning in. We've got B Money saying good information. Thank you, B Money. We will see you guys in the next live stream.